On January 24th, while the country was celebrating Natu Natu's Oscar nod, an American research firm released a report that shook the Indian equity market. The headline of the report read, Adani Group, how the world's third richest man is pulling the largest con in corporate history. The report alleged stock manipulation by the Adani Group and raised concerns about high debt and valuations. Adani Group responded with a statement on January 29. They denied the allegations and called the findings on the report a calculated attack on India, its institutions, and its growth story.
That is, nothing in that report comes from research, it comes from our disclosures. Secondly, documentary evidence we provide that they have misrepresented at best and misrepresented facts on top of it.
But the damage had already been done. The report from American short seller Hindenburg Research wiped out $58 billion from Gautam Adani's personal fortune in the span of just 6 trading days. The 106-page long report also burned a massive holes in the pockets of investors in Adani stocks. But how did a small research firm in America with a staff of fewer than 10 employees manage to erode the wealth of one of the richest men in the world? Let's dig a little deeper to find out what is Hindenburg Research and what's their agenda. But first, don't forget to like, share and subscribe to the Moneycontrol channel. What is Hindenburg Research? Hindenburg Research is a short-selling research firm that has made a name for itself by investigating and reporting on publicly traded companies. Hindenburg says it specializes in forensic financial research. In layman's terms, it looks for corruption or fraud in the business world, such as accounting irregularities and bad actors in the management. The firm says that it sees Hindenburg, the airship that famously caught fire in the 1930s to the cry of "Oh the humanity," as the epitome of totally man-made, totally avoidable disaster. The firm's website states that they are looking for similar man-made disasters floating around in the market and aim to shed light on them before they lure in more unsuspecting victims. Who is behind Hindenburg Research? Hindenburg Research was founded in 2017 by Nate Anderson. Nate Anderson started his career in finance at a data company where he worked with investment management companies. Before launching Hindenburg Research, Anderson also worked with Harry Markopolos, the man who flagged the world's largest Ponzi scheme in the history, worth $64.8 billion. In 2017, Anderson founded the Hindenburg Research to uncover hard-to-find information from atypical sources that can inform investment decision-making. Who else has Hindenburg gone after? Since its inception in 2017, the firm has published investigative reports on 16 companies. Hindenburg has reported irregularities in companies like Wins Finance, Genius Brands, China Metal Resource Utilization, SC Vox, HF Food, Riot Blockchain, and many more. But the most notable report was about electric vehicle maker Nikola Corporation, in which the firm accused the company of misleading investors about its technology and business prospects. The report titled Nikola: How to Parlay an Ocean of Lies into a Partnership with the Largest Auto OEM in America detailed a vast array of alleged lies and deception by Nikola in the years leading up to its proposed partnership with General Motors. Among other issues, the research firm pointed out that Nikola's in-motion promotional video for its Nikola 1 Semi was nothing more than a truck being rolled down the hill in the Utah desert, a claim the company later admitted. In 2021, Nikola agreed to pay $125 million to settle SEC charges for misleading investors about its product, technical advancement, and commercial prospects. The Nikola Corp stock, which was trading close to $63 at its peak, is currently trading close to $2 per share. What does Hindenburg get out of this? So what's in it for Hindenburg Research? Why do they publish these investigative reports that impact not only the companies they are writing about, but also their investors? The simple answer is money. In its report on the Adani Group, it said that it has taken a short position in Adani Group companies. The firm took a short position via bonds that trade in the US and other investments that trade outside India. A short trade is a way for someone to make money if an investment's price falls. If the price of a company's stock or bond falls because of the negative attention from its report, Hindenburg can profit. While Hindenburg's report can be highly influential, It's important to keep in mind that they represent just one perspective, and it's always a good idea to do your own diligence and consult with a financial advisor before making such investment decisions.